Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the ticker symbols that were in play on Friday. And so first up we're going to take a look at ticker symbol TEVA. Okay, so this is currently in the bull zone on RSI, so it's looking good on RSI at 66. Or 65. There's still room to run until that 70 overbought zone. You want to see Fasto stay above 80, currently at 92. There was a bullish crossover on ADX. Notice the green line crossed the black line to the upside. If plus DI stays above ADX, that'll signal the bulls are in control. So there was a nice bullish close on Friday on a volume spike. So if you take a look down here at the volume bars, you'll see a nice spike on volume, 37 million shares traded. There was a PSAR bull flip. So the green dots are now below the candles. The stock has been in an uptrend since the close above the middle Bollinger Band back here on the 17th. And so as long as the middle Bollinger Band keeps holding currently at 1387, the uptrend is intact. It spent a couple weeks turning the green line here, the 50-day simple moving average, currently at 1421 into support. And so after holding that level, bouncing off of it on Wednesday, it got back above the EMA 4 on Thursday, and then Friday it broke out higher. And now what we're looking for is a break above the bottom of the gap. There's a gap between these two candles here back in October, and so this is the bottom of the gap. If we can break above the bottom of the gap, the 100-day simple moving average at 1718 will be the next target. If you can get through the 100-day simple moving average, a gap fill will be up here at 18. So when the candles run up to 18, that would fill this gap. So yeah, so keep an eye on TEVA. Okay, take a look at MSFT. Yeah, this has a nice move this week above the middle Bollinger Band, so that's exactly what bulls wanted to see. So you have 83.22 is the key level to hold. That's the dotted purple line here. As long as those candle, as long as that level holds, then the uptrend, a new uptrend should be intact here. It's currently in a sideways channel. And so it dropped below. It was risking starting a new downtrend on this red candle here. It found support at 81, and the key level now to hold is this green line here, the 50-day simple moving average at 80.66. On the drop below, it tested that zone, didn't quite get to it, but it did hold. And so now that it's back above the middle Bollinger Band, the next level to break is going to be this 85 resistance zone. This closing price here on November the 28th. If it closes above that level, and the high there was just above 85, that's going to signal it wants to break out higher. So if it fails to get above 85, that would be the top of the channel. Then it could pull back in. It could continue trading sideways. It's been trading sideways now for a good 5 weeks, and so it needs to break through 85 to head higher. If it drops below 81, that's going to signal downside risk. You really don't want to see it drop below 83 if you are a bull. It needs to stay above that level. Okay, take a look at NFLX. Okay, so Netflix made a nice move above EMA's 4 and 8 on Friday and above the 100-day simple moving average at 185. So that's the gold line down here. And so the candles were riding EMA 4 resistance lower. That's the pink line here. And they got down to this 100-day simple moving average support level where the candles finally got above all 3 key levels on Friday. So it closed above EMA 8 at 187. You want to see that level hold. And then now the big level to break is EMA 13. That's this orange line. If you can see a break above 189, it could possibly run back up to the middle Bollinger Band. That's the big level. It needs to get back above the middle Bollinger Band, and then right above it is the 50-day simple moving average. Once 193 turns into support, that's when it could get a new uptrend going. If it fails to break through these 3 crucial resistance levels, that's going to signal the downtrend is still intact. It's currently in a downtrend. It tried to get an uptrend going again when it got back above the middle Bollinger Band here on the 28th of November, but it failed. And it's in a pretty heavy downtrend right now. It's trying to reverse it. Right now, this is just a bounce, a short cover rally. It has to get above the middle Bollinger Band for the bulls to take control again. Okay, so take a look at Apple, talking about downtrends. So Apple is currently in a downtrend as well. It's currently, if you look here, it made a double top. It came up here in November. It hit a top here at 175, between 175 and 176, and then it hit it again. here, heading into the what is this, the 24th. And then it ended up double topping, and it's created this downtrend, and it broke the middle Bollinger Band here on the 28th. The close below the dotted line, that was a big red flag. Notice how it was holding before. The uptrend started here when the candles got above that dotted purple line. They came up, bounced off of it, and you had the nice push higher. They came down and tested that zone and bounced off. Well, they broke below now. Now it's in a downtrend. Now it's heading lower. It's in a downtrend. It's needs to break above 171.50. That's the key level. It needs to get above this red descending resistance line. They have the program now set in a downtrend. Notice how it had the gap up open. It was right at EMA 13, currently at 170.47, and it failed to it got above it temporarily, but then it failed to close above, and it pulled all the way back down, and it actually closed below EMA 4. So the candles are writing EMA 4 resistance. It's 1, 2, 3, 4, 5, 6. It's multiple closes below that level. Once it can get above these EMAs, then that's a signal, okay, it's heating back up. But there won't be a new uptrend until it gets above 171.50. So yeah, if it keeps heading lower, then the target is the 50-day simple moving average at 164. This is a really big support level here at 169. You can see that, it was a gap level. So you've got, it came down. There was a gap between this candle and this candle. And so this is the bottom of the gap. This is the top of the gap. So that filled. So gaps do fill sometimes on the big boards, on the big plays like Apple. But the bottom line is that it has to break resistance to get to break this downtrend. So yeah, let's look at Facebook. So Facebook is trying to hang in there. Okay, so it does have RSI here at 53 and Fastos at 65. So they're both in the bull zone. It had the bullish crossover here on ADX with plus DI over ADX, and then minus DI here, and plus DI are pinched. You want to see that green line go above the red line if you're a bull. And so there was a close above the middle Bollinger Band on Thursday, which was a nice move. The middle Bollinger Band, you can see the Bollinger Bands are over here, and the middle Bollinger Band's 178.42. And so you want to see that level hold. That's the dotted purple line. If it can stay above that level, then this new uptrend should begin. The key level to break is right here, 183. That's the closing price on the 27th. If you see a close above 183, that should be the signal that it wants to break out higher. This was another double top play. It came up, made a top at the beginning of November, came down, bounced nicely off that middle Bollinger Band, came right back up to 183, failed to break, double topped, and pulled back. It bounced temporarily off the 50-day simple moving average like it did back here in October, but the bearish change in trend here was it did drop down to that 100-day simple moving average, which did end up holding down here at 172, and then it quickly got back above. And so it looks like there was obviously some big loading. See the 40 million share day. So on the drop down, it looks like there were some bottom feeders, and so now what you want to see is that push above 183. Back above 183 is going to signal it wants to break out higher. Okay, let's look at GLBR. Now this stock here, it had the big dead cat bounce here to end the week on big volume, and so as you could see, it was a very thinly traded stock. There was like absolutely no volume, and then at the November, as it started dropping, volume was picking up. People tried to time the bounce here a couple times, but you could see they got caught holding the bag. The candles were still riding EMA 4 resistance lower. They had the head fake here on the 29th of November. People were thinking, yeah, this is going to be a good one, but then it pulled back. It formed a long upper wick, and it kept going. And then finally down here, it ended up bouncing on Thursday of last week on huge volume off of the 25-cent support level. And the close above EMA's 4, 8, and 13 on that day did signal more upside potential. And congratulations, everyone. There was huge follow-through on Friday, and so this was a big winner, a huge 2-day gain. It did break above the middle Bollinger Band at 82. That is the key level to hold. That's the dotted purple line. If it holds that level, then a new uptrend should begin. The key level to break is the 50-day simple moving average at 113. It closed at 112, right below it. Look how they pulled it back right below that key level. Notice how that was big resistance in November. It failed to get above it, and it pulled back. back. It hit the 100-day simple moving average at 135. That'll be the second big level of break. It tested that on Friday and pulled back, forming a long upper wick. Very similar to the move in September. Notice how it ran up to the 100 and pulled back. And so if you're a bull, you want to see it get above that 113, 135, and then you could possibly see the run up to the 200-day simple moving average at 172. That's lined up with the upper Bollinger Band. That would be the next target next week if it can get above. If you see it fail to break above 113, look for potential bounce off the middle Bollinger Band at 82. Okay, take a look at APVO. The stock is in a really strong uptrend. It has a very, very nice chart. For people that are looking for that nice swing trade chart, this is what you're looking for. It keeps holding the middle Bollinger Band. Goes up. Closes above the upper Bollinger Band, pulls back. You can reload. It keeps forming really nice, just holding support all the way through. It's not, hasn't been crazy sexy, but it finally broke out this last week. You can see, boom, the big payoff for everyone that was holding, and then it took off. And it was a really big, really nice play. It had, 5 green volume bars in a row. It was up 5 days in a row, and you had the nice, push up above EMA 4. It did close well above the upper Bollinger Band, and there was a pullback from 450, so keep that in mind. The big thing on this stock is with it breaking out, we need to go out and look at the weekly chart, and the weekly chart shows a really nice breakout this last week. So each candle is 1 week of trading on this chart, and it did close right at a key level, which is right here from back in August of 2016. That was the open from that month, and then it had pulled way back down here and closed, and so it closed right at that level. So if you could see it break above this 425, 430 resistance zone, get a close above, that should signal that it wants to keep pushing higher. And then you've got all the way up here at $6 is the next big level on the weekly chart. So this could really, so it's a really nice move. It did push well above the upper Bollinger Band, as you could see here on this move in October. When it got above the upper Bollinger Band, it did pull back in. If it does pull back into the bands, it doesn't mean the chart's broken. It just means that it got a little ahead of itself. And so what you look for is a reload off of EMA 4 at 347. The pink line is as long as it holds. If that doesn't, it could drop down to EMA 8 at 312. As long as the middle Bollinger Band way down here at 240 holds, the uptrend's intact. It's been holding EMAs 4 and 8, and so it would be a change in trend if it dropped below. It would be most bullish if it could close above for the week above EMA 4 and keep that pattern going. So keep in mind, it's all about the close on the weekly chart, and the weekly chart candle does not set until the closing bell on Friday. Okay, take a look at NOG, and so this stock, has a nice uptrend going as well. You can see here it's performed nicely in November and heading into December. It got above the middle Bollinger Band here on the 31st of October. And then it proceeded to break, above the 100-day simple moving average. It got, like I said before, when stocks, sometimes when they get well above the upper Bollinger Band, they work back in. And so you shoot for the reload off the middle Bollinger Band. Notice how this wick right here bounced right off of that level. And so it was also the 100-day simple moving average that it pulled back to. So that was the key moving average. The uptrend stayed intact. And so what this stock's been doing is it's been having a hard time with the 200-day simple moving average. That's the red line here. It's currently at 153, and so it closed back above that level on Friday. And so if it can stay above the 150, turn that into support 150. That's going to signal that it's in play next week. You want to see it stay above the EMA 4 at 158. That would be most bullish. And then you want to see it push above this 175 resistance zone. That's the closing price here on this white candle. And that would put the 300 day simple moving average up here at 193 on deck. So yeah, if they can get above the 175 zone here at 175, 180 zone, then that's going to put this 193 and that's the ultimate target. Now that it's back above the middle Bollinger Band, you could see a run up there, and that could be a nice 20% gain. So keep an eye on NOG this week. Okay, if you'd like to learn more about charts and technical analysis, come check us out in our new chat. I will post a link below the YouTube video. All are welcome. That you can download it for free. We do have premium channels for our members. It is a really good bargain at only $15 to $20 a month. So I recommend everybody come in and join in the premium. Thank you.